Well, we want to welcome you to our call today with Ed Newton, CPA, CFP, and President of Newton Financial Network. The title for today's call is Maximizing Your Social Security Benefits, Part 2. And if you're listening on the phone, if we have time at the end of the call, we'll open up the phone line so Ed can answer any questions that you have. Or if you are listening via the webcast on the Internet, there is a box towards the bottom of the page titled Submit Your Question for the event here. Just type in your question if you have one, click the Submit button, and we'll check those messages at the end of the call and try and answer those too. If you are not already a client of Ed's, he's originally from Huntington, West Virginia, has a degree in accounting from Virginia Tech and a master's degree from Liberty University. Ed landed at Arthur Anderson and Company in their tax department and then began his CPA firm in 1977. He is a CPA and a certified financial planner and is uniquely positioned to help clients achieve and sustain a worry-free retirement. And if you do know him, you know Ed has been a commercial pilot for a major airline since 1982, and his current weekend routes are to London, England, and Frankfurt, Germany. Plus, he recently acquired or reacquired the title of captain. So congratulations, Ed. Good morning and welcome to the call.
Well, thanks, Jeff. I appreciate that very much. And I'd like to welcome everyone on the call. I'm hoping that we do have a very good turnout today, and I'm hoping that part of the reason is because we stimulated some thought on our last call, and that some of the folks that may have listened to the replay of the first call are joining us on this second call. At any rate, I'd like to welcome you aboard, and let's just dig right in. I know this can be fairly dry at times, and I apologize for that. However, it's a pretty dry subject, but it's one that I think is very important for all of us. So what I want to do today is I want to, first of all, give you 5 steps to understanding Social Security benefits. And then I do want to talk about the 3 general rules to maximize your Social Security benefits for your lifetime. Then I want to talk about some secrets, if you will, of maximizing your strategy. And just as important are a few gotchas that could really cost you some money over your lifetime when you are taking your Social Security. Finally, we'll wrap it up with if you've got any general questions. I would say that if you've got specific questions that pertain to you, I'm happy to answer those, but it's probably best that we do that offline. So in that case, what I would do is suggest that you just give Sarah Beth in the office a call, and she can set up a time for us to either meet in person or on the phone. And for you, those of you that may not have it, the phone number is 704-552-8689, and I'll give that to you again at the end of the webinar. So let's jump right in and talk about the 5 steps to understanding Social Security benefits. Step 1 that I put together of these 5 steps is basically just to become familiar with the Social Security Administration's website. The website is ssa.gov. And I'll talk a little bit more about that. I just want to run through the 5 steps first, and then we'll talk about each one specifically. So becoming familiar with ssa.gov is very important. Number 2, to know the factors that may affect your monthly benefits. And there are an enormous amount of factors that can affect your monthly benefits, whether it be whether you're single, married, divorced, widow, widower, child, all of that plays into what your benefits may be. Number 3 is to understand the key Social Security payment strategies, and that's where we're going to talk about some of those a little later on in the 3 keys to the 3 general rules, and then as well talking about the secrets and the gotchas. The 4th step, in my opinion, is to work with a trusted financial advisor to create a retirement income plan. It's been put out by Social Security Administration that 17.9% of a person's retirement income comes from Social Security, or can be expected to come from Social Security. And of course, these are averages. But only 17.9% from Social Security, which of course means that you must have some other means of support during your retirement, what we normally think of as your retirement years. And then the fifth step is to contact the Social Security Administration not more than 4 months before you want to receive your first payment. So let me take step one for a second and just briefly chat about that. And that is to become familiar with the website for the Social Security Administration, which again is www.ssa.gov. If you spend a little bit of time online now with that website, and I would encourage you to also go ahead and establish a username and password, and so that you can log in at any time and check to be sure that your benefits are being calculated correctly and that they show your income. But they have many resources online, including several different calculators. One calculator that you can go to very quickly gives you an idea of your benefits, and then also more detailed ones that they can actually pull your own information. So among the resources that they provide are things like estimating the potential benefits, as I was just talking about, finding your full retirement age, and we talked about that last time. For most of the baby boomers, the full retirement age is now 66. For those that were born in 1955 and later, your age goes up by a month or two for every year. So that's a good site to find your full retirement age. On there, you can also estimate your spousal benefits that we talked about in the first session, and I'll certainly talk more about here in just a little bit. And finally, you can actually apply for benefits on the Social Security Administration.gov, SSA.gov website. So it is important to also double check that information, that it's been reported correctly, that your wages each year have been reported correctly, because as we've already talked about, your monthly payments are based on what your Social Security wages were. So that's a very important item to know. Speaking of those benefits, let's talk for just a little bit in step 2 about knowing the factors that affect the monthly payments. There's a number of factors that the Social Security Administration takes into account when they calculate your benefit, and those primarily are your age, your employment, some taxation, and your spouse. So just as a quick overview, let's touch on a couple of those things. You're eligible to receive your full benefit at full retirement age, or FRA, as what the Social Security Administration likes to use, which again has been increasing from age 65. Now it's pretty much 66 for most of the baby boomers, and soon it will be age 67 for everyone. You can begin collecting your Social Security benefits as early as age 62, and you can delay them up until age 70. You can actually delay them past age 70 if you'd like, but there's absolutely no benefit for that because your benefit does max out at age 70. So, again, in general, the earlier you choose to take your benefits, the lower your monthly payment's going to be. For those that wait past full retirement age up until age 70, you can increase your benefit by 8% per year. So waiting 4 years is a 32% increase in the benefits. And we'll talk in a little bit again about with my general rules about the idea of taking it at full retirement age or delaying it. So just a couple of quick tips. Delaying the benefits, of course, could mean higher payments in later years, and that the FRA, full retirement age, depends on the year you were born. And again, this can be found on the website, ssa.gov. To give you an idea of how the benefits might be if you take them at full retirement age or early at 62 or later at if you defer it all the way up until age 70. Let's take someone that their benefit at full retirement age would be $1,800. If you were to start taking that at age 62, your benefit would be reduced to $1,350. And on the other end of the spectrum, if you were to decide to wait until you were 70 to take your benefit would rise to $2,376. Now, the Social Security Administration has determined that the cost of the program is the same regardless of when the benefits are started. So according to the actuaries at Social Security Administration, they say it really doesn't matter when you start your benefits, that you will get the same amount of money. Of course, that's assuming you die at the age that they have projected that your year of birth will die. So if you have longevity in your family and you think that you are going to live longer than, you might say, the average person that was born roughly the time you were, then you're better off certainly waiting and taking the benefit at age 70. If, on the other hand, you get close to 62 or full retirement age at 65 and you have some serious health issues at that point, you might make the determination that it's better to go ahead and start the benefit now instead of waiting until later. So next, let's move on to step 3, which is understanding the key Social Security payment strategies. When looking at your total retirement income plan, you really need to balance 4 what I think are very important elements of your plan. One is growth, the potential to grow your assets and to keep pace with inflation. I have always felt for many, many years now that inflation is the worst event that can happen to a retired person as they're planning their income stream for retirement. I know a lot of people worry about stock market corrections and quote-unquote crashes and everything, but history shows us that the real problem is inflation. And the only way we can battle inflation with our resources that we have is to get growth out of those assets as well. The second point that I think is important, or the second element, is flexibility, having easy access to and control of your money. Many of you that I've spoken with individually know that I am very much a proponent of when you leave a job, whether it be just by changing jobs or through retirement, is that you take your money with you. You left the company, why would you leave your money at the 401k? So taking that money, and either if you're changing jobs, if you do decide to move it in a 401k at the new employer, or what I think is a better alternative is to take that 401k and roll it into an IRA so that it can provide you that growth that I was speaking about earlier. The third element that is very important in the retirement income plan is preservation. Keeping a portion of your principal intact. So even though we do have to have some growth, we also want to protect and preserve our principal. And one of the key steps that we do at our firm, if someone is in the stage where they are withdrawing funds, is that we maintain maybe 6 to 12 months of their expected withdrawal in cash so that we don't have to be concerned about what the market does on a certain day, a specific day, to raise capital. So again, preservation of your capital is also one of those 4 elements that are absolutely essential in having a good retirement income plan. And then the last one that I would say is some guaranteed income. And by guaranteed income, I'm talking about having some stocks that are within a mutual fund or just the stocks themselves that pay a good dividend. Of course, we would have a portion of our retirement age money in bonds as well that would be providing some. The other thing that this guaranteed income is the Social Security benefits. Those benefits are as guaranteed, I believe, as a guarantee you can get. I know there's a lot of talk about Social Security being underfunded and going bankrupt in 50 years, 75 years, whatever your local journal may be talking about at the time. But it is a fact that the Social Security benefits do really form a bedrock of our retirement income, and therefore we need to make the best choices and the best decisions when it comes to those making the selection on the Social Security benefits. So let's then talk about, I mentioned working with a trusted advisor. I think that's very important. Whether you work with us or some other person really doesn't matter. I think what is important is that you work with a trusted advisor that can help to take some of the emotion out of the decisions that are being made. So I think that helps you to have a retirement plan. That advisor can help you devise a retirement plan that's built to last. So certainly I believe that's an important element and an important step to understanding your retirement income. And then finally, as I said, you just want to contact the Social Security Administration not more than 4 months before you want to receive your first payment. And you can file online, as I mentioned earlier, and I know I keep saying it over and over, but I want to be sure that you do have that website, ssa.gov. Or if you want to make an appointment, you can call 800-772-1213. Again, that's 800-772-1213, and make an appointment with the Social Security Administration to begin to apply and then receive the benefits for your Social Security. The biggest key that I think to having a retirement income strategy and plan is that you do have that plan that's built to last. The Social Security Administration again estimates that the Social Security benefits for most people, for the average person, comes up to about 17.9% of the income, the total income. So it's critical that you establish a plan to provide an income plan for you for those years in retirement. Let's talk a little bit about now these 3 general rules that I think can maximize your lifetime benefits. Rule number 1 is just to be patient. Take Social Security's best deal by waiting to collect as long as possible. That way you're taking a much higher benefit over somewhat fewer years. As I said before, the Social Security Administration maintains that the program will cost them the same no matter when you start your benefit, taking the benefits. So again, as you approach that retirement age, you do need to consider what you feel like your longevity will be, whether it's you think you're going to live longer than the average person, or if you do have some health benefits, health issues, you may decide that you do need to start it earlier in order to try to get the highest benefit. The second rule is that, as I call it, I want to say, get all of what's yours. You want to be sure that you take all the benefits that are available to you based on the work history of your current spouse, and if you do have an ex-spouse, that could also come into play, as well as if you are a widow or a widower, you need to take into account your deceased spouse's circumstances as well. So again, that's why you really need to take some time to look at all of the different options, and again, we'll talk more about that as we get to the secrets and the gotchas, as I say. The third is to get the timing right. Since you can't collect two benefits at once, we talked about this in the first one, you need to collect one benefit early while letting the other benefit grow if that's applicable to you. And again, we'll talk about that in some detail in just a minute. But you do want to get the timing right, and you don't want to make an incorrect decision that you may have to live with for the rest of your life that could cost you thousands and thousands of dollars. So retirement benefits starting at age 70 are 76% higher than those starting at 62. So waiting that 8 years between 62 and 70 can have an enormous impact on the amount of your benefits, which also then affects your spousal benefits as well, whether it be you taking your spouse's benefit or your spouse taking the spousal benefit off of yours. For spousal benefits, the benefits are 43% higher at full retirement age than they are at 62. So they're waiting maybe 4 years, 5, depending upon when you hit that full retirement age. Your benefits can be significantly higher, 43% higher. And the same thing with survivor benefits. They're 40% higher at full retirement age over the idea of taking them at age 60. So let's, and just to give you an idea, I did pull my own benefit calculations, and to give you an idea of some numbers, I know I did a little bit before, but that was kind of a theoretical thing. This is more practical, I guess you might say. I pulled mine, and just to give you an idea, if I had taken my Social Security benefits at age 62, I would get $1,767. Waiting till full retirement age for me, which is 66, would up mine significantly to $2,356. And if I wait until age 70, again, talking about that deferring until age 70, it would go all the way to $3,229 per month. Now, some of you may be saying, okay, well, what's the break even? We hear that a lot. And the break even is about 9 years. So you just about have to be on your Social Security for starting at full retirement age. You would have to go about 9 years to have a break even to the point if you had waited to age 70. So again, your own circumstances will vary, but that's something that you do need to take into account as your own longevity. So let's talk a little bit about some ideas that I think can help you and certainly some things that you need to think about in order to determine when to take your Social Security benefits. One is the idea of being patient in taking those benefits, as I've just talked about the difference between full retirement age and age 70, and that the age 70 is 76% higher than you would get at age 62. Also, I think it's very important to understand, and you may have picked it up just from the way I've been talking about it, but there's no advantage to waiting past age 70 to take your retirement benefits, or past full retirement age to take the spousal or widow benefits. Because once you hit age 70 for your own, or you hit full retirement age for a spousal benefit, the benefits do not go up anymore by waiting longer. So you would just be costing yourself money if you waited past age 70 to collect your own benefit. Now, if you're already collecting and now you're saying, well, maybe I should have or maybe I shouldn't have taken it when I did, then you can consider suspending and restarting your benefits later. So that there's a way to do that as well. So if you're between your full retirement age and age 70, you do have the option to go ahead and suspend the benefit and restart at any time up until age 70. From the time that you suspend until you're age 70, they will still give you that 8% a year. So you can increase your benefit even if you've already started and you say, well, maybe I should wait till I'm 70. You can go ahead, suspend that now, and then start your benefits back up at age 70. Excuse me. One of the ones that we really see that makes a lot of sense for a lot of people is if you and your spouse are roughly the same age. Now, if your spouse is much younger than you, this doesn't work because of the spousal benefits cannot be taken until the spouse is at least 62. So you can file and suspend to get the benefits for your spouse. So let's say that I'm approaching full retirement age and my spouse is same age as me or a year younger, a year or two younger, something like that. So I get to full retirement age and I decide that I'd be better off, I'd really like to wait until I'm 70 to get that increase, that 32% increase in my benefits. I can file for Social Security and immediately suspend that Social Security of mine, and then my spouse can file for the spousal benefits, assuming she's 62, and my benefits can continue to grow at that 8% while she's starting to get the spousal benefits. Once, again, if we assume that a couple is married, you can get the maximum spousal and retirement benefits. After reaching full retirement age, you file for just one full spousal benefit, which is half of your spouse's full retirement benefit, and then wait till 70 to collect your largest possible retirement benefit. So again, in that situation that I was just talking about, so let's say my spouse takes the spousal benefit and she starts taking that at age 62, then she can take that, and when she turns 70, since she's not filed for her own, she can then suspend hers or stop taking the spousal benefit and begin taking her normal benefit for her at age 70, under the assumption that, of course, that would be higher. So you're not locked in. Once the spouse takes the spousal benefit, you're not locked into having to take the spouse to take that same amount for the duration of their life. You can also, and a lot of people aren't familiar with this, but you can actually collect suspended benefits in a lump sum. However, it does cost you something. So let's say you suspend until age 70. You can actually request the lump sum payment of all your suspended benefits. So that's the benefits you would have received had you never suspended. However, doing that will reset your monthly retirement benefit to the level it was at the time you suspended. And you won't be credited with those delayed retirement credits either, the bonus that probably prompted you to wait until age 70. So let me see if I can put that in an example for you. Again, let's say that I've made the decision to wait until I was 70 to take my benefits from Social Security because I did want those delayed retirement credits. As I approach age 70, I find out that I've got a terminal illness, and I'm only expected to live, I don't know, a year, 2 years, whatever, something, relatively short like that. I can actually go to the Social Security Administration and say, you know what, I would have rather have taken my Social Security when I was 66 at full retirement age, and I'm going to change my mind. So, Social Security Administration, I want you to give me a lump sum payment of everything that I would have collected from age 66 had I filed up until now I'm 1 month before 70, let's say. Now, I realize that my benefits will be calculated as if I started taking them at the full retirement age of 66. But if I really feel like that I've only got a short while to live past my current day, then that can provide a substantial amount of income for your spouse upon your passing. So that's something that also you need to think about if you do wait to file till 70, and then as you approach 70, you find that you do have some reason to go ahead and go back. You can do that. Also, delaying the retirement benefits can help your survivors. By delaying taking your retirement benefit, either by not filing or by filing and then suspending it, will mean that you have higher survivor benefits for your spouse or if you had an ex-spouse whenever you pass away. So again, that's a way to provide additional income and protection for your spouse is to delay taking it because that does raise their survivor benefits. Taking the retirement benefits early can also hurt your survivors. It's just the opposite pretty much of what we were just talking about. And that is that the widow or widower benefits are normally equal to the deceased worker's benefit at the full retirement age. Or if the spouse dies later, what that spouse would have been entitled to at the death, including the delayed retirement credits. But if you filed for it, if the deceased spouse had filed for retirement benefits early, the widow would not receive his full primary insurance amount, but something smaller based on quite honestly, a very complicated formula involving that reduced benefit. Let's move over now to a little bit of gotchas. I know I was hoping to keep this at about 30 minutes, but I know I've run over a little bit, but I do want to run through these gotchas and then see if we do have any questions. The gotchas can really be very detrimental to the amount of income and to your position that you're able to get from the funds that you get from your Social Security. If you take two benefits at one, you're actually going to lose, or at once rather, you're going to lose one of the two benefits. Now, some people say, well, I'll take my spousal benefit and my own benefit. Well, Social Security says, no, we're not going to let you do that. They'll pay you the larger of the two benefits. Now, the tricky part is, from the Social Security Administration, is that they won't really tell you that they've eliminated one of your retirement benefit. Instead, what they'll claim is that it's giving you retirement benefit plus the difference or the excess between the two. But in reality, it's used the spousal benefits to wipe out your retirement benefits. So you can receive two different benefits, but not at the same time. Also, once you file for your retirement benefit, you can never take an auxiliary benefit by itself. So as soon as you file for your retirement benefits, you forfeit forever the ability to file under any other benefit just by itself. This is true even if you suspend your retirement benefit. So let's say for that example, for that one, let's say I were to file and suspend for my own retirement benefit, then I am forever precluded from ever trying to get a spousal benefit off of my spouse or any other, or a survivor benefit. So once you file for your own retirement benefit, you can never take any other auxiliary benefit, if you will. The third point, as far as a gotcha that I'd like to talk about, is that the retirement benefit will generally wipe out the spousal or the divorced spousal benefit if you take it at the same time. That pretty much goes back up to what I was talking about in the first one of my gotchas about not being able to take two at one time. So consequently, even if you've earned relatively low covered wages during your working life, taking your retirement benefit will likely mean never being able to receive a spousal benefit or a widow's benefit at any point. So that's something that also has to be considered. If you take your spousal or divorced spousal benefit early, before your full retirement age, you'll actually be deemed to be taking your retirement benefit early. So many people think they can collect a spousal or a divorced spousal benefit by itself before full retirement age. That's not the case. If you act on this misconception, 4 bad things can actually happen to you. First, you'll be deemed to be filing your own retirement benefit. Second, as we talked about just a minute ago, you'll only get the larger of the 2 benefits. You'll likely never receive a spousal benefit as the third thing that will happen to you. And fourth, you'll have your own retirement benefit permanently reduced. Yeah, you can undo some of that damage by suspending your retirement benefit at full retirement age and starting it up again at age 70 to get that 32% higher level. But that delayed retirement credit gets applied to your reduced retirement benefit, not to your full retirement benefit. So once again, if this one gets you, it gets you for life. I'm going to skip over a couple of these others because I don't want to take too much of your time up. Let's see. If you take your retirement benefit before age 70, you may permanently reduce your surviving spouse's widow or widower benefit. And again, since the Social Security Administration bases the the widow or widower benefit on your benefit, whatever your benefit was when you died, if you take it early, the wife may lose, or the spouse may lose out on some of that. Here's a big one that could definitely be a gotcha if you're not careful. If you suspend your retirement benefits and yet you don't pay your Medicare Part B premiums, you may lose those delayed retirement credits. So my understanding of the rules are that if you don't pay that Medicare Part B out of your own pocket at full retirement age at 65, beginning at 65, if you don't pay that out of your own pocket, then when you get that full retirement or the age 70 retirement benefit, you've given up that 32% increase. You'll only get what you would have gotten at full retirement age. That covers pretty much what I wanted to try to hit today. So at this point, Jeff, I guess we'll open it up for some questions. If anyone has anything, like I said, of a general nature, I'll be happy to try to answer it. If you have specific questions, it would be, and I'm very happy to do this, just give Sarah Beth a call at 704-552-8689.
Yeah, Ed, I've opened up the lines. I think Terry had his hand up. He may have a question. Terry, you there? Don't know if Terry can hear me. Yeah.
Well, Terry, if you can hear us and we can't hear you, we cannot hear you, again, feel free to give me a call at the office, and I can discuss it with you personally.
And Ed, I'm checking on the internet for any questions. Again, if you're listening on the webcast, if you do have a question, just type it into the box. Click the submit your question for the event, and then that will come through. Sharon mentioned that she couldn't see your slides. Maybe it's worth mentioning that we really didn't have any slides today. And just kind of walk through these things verbally.
Right. And while Jeff's waiting to see if anybody else comes on the web portion of it, I do realize that this is a very, very confusing topic. And I hope that what we've talked about in the previous one and this one at least gives you some things to think about. I did not have any thoughts that this would answer all of your questions about Social Security by any stretch of the imagination, but it is something that I wanted to bring to the forefront so that you could at least begin to think about it, do your own research if you care to, contact Social Security Administration to see what they might be able to provide you, and then again, just encourage you to speak to your own advisor and get some input from them as to what is best for you in your particular situation.
Ed, when somebody does contact the Social Security Administration, are they looking for a printout or some kind of something online that talks about their benefits, or is that something that the Social Security Administration mails to them physically through the old-fashioned U.S. Postal Service?
They do it both ways. Shortly before each birthday, you should be getting from Social Security Administration a mailed report that shows what your income was for each year from the time you started until the most recent year, and then it will give you an estimate of your benefits. You can also go online at any time and get that from the SSA.gov website as well.
And if they get that, is that something that they ought to send to you or bring with them to a meeting with you to review, just to make sure it's accurate and for planning purposes?
That's an excellent point, Jeff. Appreciate you bringing that up. That would certainly be something that should be brought to a meeting with us if we're working with you on your retirement, or if whoever your advisor is, I would suggest that you take that, because that should be a large portion of the planning of your retirement income.
Got it. That makes sense. Well, Ed, I think, Terry's question was about the slides as well.
Okay. All right. Okay, well, since we don't have any other questions, I do appreciate everyone being on board today. And if you're listening to the replay, the same offer exists, that if you've got any questions, feel free to give us a call here at 704-552-8689, and we'll do all we can to provide you with information to help you make a good, sound decision.
Great. Thanks, Ed. We appreciate everybody being on the call today. And again, if you have a question and you're listening on the replay, contact Ed, and he'll be glad to work with you. Thanks again, Ed.
Thank you, Jeff. Thanks, everyone, for being on board. Have a good day.